The 4-step method to high performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. Building your discipline and confidence in live time is how you will be able to produce those results consistently over the long term. The 7-step daily routine for high performance traders is about developing your process, your habits, your mindset, your beliefs, your skill set to master the markets. Bulletproof yourself for success and consistency over the long term. The links are in the description box below. Let's get started.
G'day traders, Stacey Burke from Stacey Burke Trading. A mindset reset, a technical video reinforcing the importance of hunting specific setups, building your playbook, focusing on the playbook setups, and then working on your skill set, the patience, the discipline, and the understanding of executing and scaling up those trades in size. At the beginning of the playbook, there is a quote by Mark Weinstein, Market Wizard, waiting for a baby antelope, and not just any baby antelope, preferably one that is sick or lame. Only then, when there is no chance it can lose its prey, does it attack. That to me is the epitome of professional trading. You know, I hammer home the importance to traders week in and week out why most traders lose. They don't stick to a plan. They engage in random, impulsive, potentially self-sabotaging, degenerate gambling type of trading. They look for trades everywhere. They just take trades. They're focused on little minutia trades, the little movements inside everywhere, figuring out algorithms and chasing movement and levels and looking. The more they trade, they think they associate trading more with actually being successful, whether they win or lose. I take trades. But the importance of the playbook is actually focusing on setups where you have a 90-10 edge and you almost can't lose. Of course, there's always the risk of losing because traders can over leverage. They can get in too soon. They might not lock in profits. They might get out too soon. They might trail too tight. They might hold on to a loser too long. They have too much size on a losing trade. They don't have enough size on a winning trade. And as traders find out, the more specific and patient and detailed they get about themselves, because the trader is the only variable. Markets only do 3 things. Markets only do 3 things. Now listen to this statement really closely. Traders do all kinds of things. That's the problem. The trader is the variable. They don't get very specific and hunt setups. Now there's a block with a lot of traders. They associate going to the market, figuring out markets and trying to figure out how to trade them versus hunting money-making scalable opportunities. Okay, so look at the 3 things that markets do. Every single market, any market, I challenge anybody to prove these 3 things otherwise. They break out, they pull back, and they stay in breakout and continue to trend. They break out, that breakout consolidates and reverses back inside of the range that it broke out of. Or it stays in a higher time frame trading range, and there are still opportunities either in markets that will break out and fail, or buying low or selling high. That is it. Those are the only 3 things that markets do. Any market. So the more you focus on minutia, the more variables that you add into the mix. You yourself, the trader. Now this is the fallacy that traders chase. They think the more they learn about all these little things, the better they'll get at trading. When in fact they start trading more variables, their results tend to be mixed and over time tend to be negative. But they're chasing every little thing. Every little level, every little diddle, every little gap, push, hunt, draw on liquidity, an inversion, an imbalance, a run, a swing. I call that diddle mania. To me, that's just a complete craziness. Because I'm looking for where I can scale into opportunities and they're going to explode. Parabolic trade setups. And I don't care what instrument they show up on because all markets do the same 3 things. The problem, again, I'll keep repeating this throughout this video, is that the trader doesn't stick to the plan. They look for other trades, so they have a plan, but they do other things as well. Or they engage in other random impulsive trading instead of sticking to the rinse and repeat blueprint. Now, these are signal days. So understand the difference. People say, well, this is your theory, this is your strategy. No, these are actually signal days from markets. All they are is signal days from markets that alert me to putting an instrument on a watch list that can potentially be setting up for a parabolic opportunity. Now, what's a parabolic opportunity? Well, let's just look at a basic parabolic setup. We have a signal, a market that closes in breakout. It continues to break higher during the new day. Remember, daily signals. This market is a 15-minute chart, but it's a daily signal. It closed outside of a previous daily range. And there are only two types of setups on any instrument in any trade setup. And I don't care if it's a trend trade or a reversal trade or a trading range. There are only two setups. And that's buying low or selling high, regardless if you're focused on little diddles, minutia, swings, runs. You can call it whatever you want. But the reality of it is there's actually only a buy low setup or a sell high setup, regardless if they're trending or reversing. You're buying low or you're selling high. That's it. And this could be in a market that's going higher and it pulls back and continues to trend higher. It's a buy low setup, a trap and shift setup. It can be a market that's been breaking down and pumps up and continues to sell down lower, but you're selling high in a trend trade. Or we could have a trap and shift, day 1, day 2, day 3, a breakout again and reversal exploding back against lower level short sellers. Let's just go back and look at this example. It's an opportunity for a market to reverse quickly. So we've got a market that traps volume over hours, and then explodes and reverses fast. That's a parabolic setup, whether you're going long or short. But what's important is we had a signal day. So traders are getting caught up in all the minutia and chasing candles, but they actually don't understand the setup. We have a market that's a daily time frame setup. Now, whether you're going long or short, this is just an example that I keep hammering home in every video. There's A triple plus. We're going to wipe out an entire week, from high of week, high of month to low of week. We're going to wipe out an entire daily range in A double plus opportunity, from high of week, high of month, high of day, wiping out the entire side of the range. And then a session opportunity where we may have a breakout that reverses, and this market could continue later, but we lock in the money in our session from level to level. We shut it down and we walk away. It's a session opportunity, an A plus parabolic trade setup. Now on page 19 in the playbook, I go over two basic templates, page 19 and page 20. Monday, Tuesday, Wednesday, pump, markets in breakout. Remember I said markets only do three things. They break out again. It reverses and gives us a first red day signal. Coil sideways, and the dump begins on the back side of the week. Front side of the week, back side of the week. We have signal days, and then we have whether or not the opportunity presents in your session, Asia, London, or New York. Same opportunities apply in the long direction, dump, coil, and pump. Markets that break out continue to break down. Inside day signals, trapping traders on the wrong side of a market before exploding in a parabolic reversal. Now take a look at this template specifically right now. The reason why I mention this is that the same things happen again and again and again. What's happening though is traders are trying to catch the candle move, catch the move. I caught the move, but they missed the parabolic opportunity, the scalable trade setup. Now stare at this template for one moment. Dump, dump, inside day, breakout again, parabolic reversal. Day 1 on the backside of the week. Wednesday's day 1 on the backside of the week. Day 2 is Thursday, parabolic continuation, back to where the dump began. Now let's look at an example from this week. Keeping things simple. So all I'm looking at is instruments that give me signals. So we have an instrument that on Friday closes in breakout, the Mexican peso. So going back to what we just looked at, just the basic template, a dump, coil, and pump, we have a market that continues to make lower lows. Monday, day 1, the opening range. Again, everything's in the playbook. We walk through this over and over and over again. Day 1, day 2, day 3 breaks out again. Back to our low of week in the new week level. It's a new week on Monday, and a new month starting on Wednesday. Day 1, day 2, day 3, reset. See, I want to keep reinforcing to traders, instead of trying to chase a candle and catch a move, let the template set up. Dump, coil, and pump. The pump in a dump, coil, and pump template is the parabolic setup. The parabolic. So we had the escalator down, then, or do we have the parabolic elevator setup on the way back up? Day 1, day 2, day 3, reset. Midpoint range of the week, day 1 on the backside. So every single week I'm looking for a Monday, Wednesday, Friday template. Now there's people out there who have basically copied the material. They're teaching all kinds of things about 1-minute pushes. There's other people teaching you how to trade little swings inside, the 0.025 Fibonacci and this and that. And it's like, well, hold on a second. What's the setup? What's the scalable money-making setup? Entry, stop loss, and a take profit level that's scalable in size. Not catching little swings back and forth. Where's the template? The money-making template, the playbook setup that you're hunting. So there'll be traders that on Monday say, I caught the low on Monday, and the template hasn't even set up. I'm looking for the larger scalable opportunities. As I mentioned before, and I want you to think about this, one instrument may offer you one 90-10 parabolic setup in the week. And in this particular case, traders had the opportunity for 2. And if there was major red news, waiting for the news to be digested and then positioning yourself even as quickly as 30 seconds to a minute after that news has been digested, if it's a first bar or first bounce opportunity. Page 101 in the playbook. Waiting for major red news and then aligning yourself with the setup that is already in existence with the higher time frame, allowing that trade now to play out. Now, whether it's the Mexican peso or the NASDAQ or any other instrument, it's the same templates over and over and over again. Dump, coil, and pump. Day 1, day 2 on the backside. Escalator down, elevator up. Now, the 1-hour chart is just giving us the template. This isn't where we're going to be scaling in or entering into the trade or anything else. But I want traders to understand the same templates happen again and again and again. And they're scalable in size. Just think simple. Dump the market down and then trap volume down low. Shift and explode. Back. Lower level shorts caught down trading down low. Waiting and sitting on your hands for the easy money. Now, when traders say, well, show us setups that don't work, my response to that is, don't chase garbage. Learn to execute 90-10 setups. I'm not here to take trades. If I don't have a 90-10 setup, I'm not interested in trying to get lucky or I hope it goes my way. Don't take losing trades means what setup are you hunting that you almost can't lose on? And then sitting on your hands and hunting and stalking, as we saw in the very first slide, the weak dying baby antelope, and then executing the trade. And if you don't know how to execute that trade, get really specific and detailed and review the markets so you understand how to execute those trades in live time, and not only how to execute them, but how to manage yourself when you're at the keyboard with the mouse in your hand. The 5 P's. Proper planning prevents poor performance. Because ultimately when you're at the screen with the mouse in your hand, traders, again, they'll do all kinds of crazy things. They'll look for trades. They'll just have 5 charts open, as opposed to hunting a specific opportunity and then understanding in their timing window how they're going to scale it up in size, how it should behave, how they're going to lock in profits, and whether or not they're going to leave a trailer if this opportunity may continue, either maybe in that day itself or on day 2 of a parabolic trade setup. Same setups, any instrument, again and again and again, whether they're in the long or short direction. Now, you can walk back through these charts on your own time, but again, page 29 in the playbook, a very basic model for entry criteria to prevent analysis paralysis when the setup is there. And what have some traders done? They've put this on their chart and they go and look for trades every day. So there's nothing until the setup is in place, and then understanding the timing window in your session, and then how price should behave into the timing window, and how you will scale it up in size if it is a scalable entry, or if it's a nail and bail, an entry, a stop loss, and a take profit level. And of course, on the backside on day 2, we have the Parabolic Scalable day 2 range reversal on the backside for the scalable opportunity back to where that dump began. 2 scalable opportunities on one instrument just by following the simple template and then doing nothing else in between. If you have other instruments that also gave you opportunities, making the decision as to whether or not those met your criteria on the day in your session. If it's in the same session, I like to pick one and done, whether it's an index, whether it's a metal, whether it's a currency. But the same templates apply on any instrument. Now, we'll walk through some different examples because, as I mentioned in previous videos, US dollar cross XYZ doesn't matter to me what instrument it is. They're going to be similar templates. Which one gives me the signal and the setup in my session? Asia, London, New York. So I love it when I see all kinds of garbage about minutia. And then we see the same templates repeating every single week. We have a market that breaks out on Monday from an inside day. Friday was our closing range of the week. Remember, we talk about this in the playbook. Everything starts from Friday's closing price. We have a market that now breaks out. Markets only do 3 things. It continues to trade lower. Day 1, day 2, 3 days in breakout. 3 days in breakout outside of our inside day level. Very similar to what we just saw in our Mexican peso. Dump, dump, dump. Coil sideways. Remember, markets only do 3 things. Monday, Tuesday, opening range, initial balance for the parabolic reversal. Day 2 backside in our New York session, back to where the dump began. So we can have all kinds of diddle levels and everything else, but the same basic things repeat over and over and over again. Why is that? Because markets only do 3 things. Every market's the same. They only do 3 things. And I'll keep saying this, keep it simple. I'm hunting parabolic scalable opportunities. 2 to 3 scalable opportunities are worth 50 to 100 diddles. And it doesn't damage your financial or psychological capital in the process. Same template as page 20 in the playbook. The instrument is irrelevant. 3 days of breakout traders in the markets. We have inside day signal days, trapping volume on the inside day breakout. Monday's opening range and initial balance. 3-day setups and 3 session setups. Over and over and over again. The simpler you make this and the more patience and discipline and specificity with executing rinse and repeat playbook setups, the easier and more pleasurable, as Paul Tudor Jones says, your trading becomes. The market breaks out, continues to break out, breaks out again on a 3rd day, pulling back inside of the range, but still in breakout. 3 days of breakouts, day 1, day 2, day 3, a 3-day setup. Now what's the setup? Well, I want you to think simple again. Look at all this volume. They've dumped it down. Who's trapped? Who's trapped? Anybody trading down lower and lower. And if you bought, they came back and got you on the Thursday and then exploded back up to where the breakout began. Dump, coil, and pump. If there's major red news, sitting on your hands and waiting until after the news, but aligning yourself with that higher time frame template. Same things happening again and again and again and again. If we put our basic model for trade entry criteria, which I refer to as the dummy-proof method, dump, coil, and pump, it's just to remove analysis paralysis. A parabolic, explosive, scalable setup. 1 session wiping out 3 days of trapped volume. Dump, coil, and pump. So I reference again the US dollar crosses and following them as a basket. I'm looking for the best setup in my session. So if the train leaves the station in Asia, there may be an Asia session opportunity on the front side or the back side of a week. Market continues to break out and close in breakout. Markets only do 3 things. They break out, they pull back, they continue to stay in breakout, or they break out, they fail and reverse, or they stay in a trading range. Now here's an example again, a session opportunity, an A+ reversal from level to level, low of week to high of day in our Europe-London session. Whereas we saw the US session opportunities in the other instruments, we see the Asia session day 2 range expansion in a market that closed in breakout, continuing on Wednesday day 3, blowing off in the direction of the trend, and then an A+ session reversal in our Europe-London window. Similar templates, but different session opportunities. We had Asia session opportunities on the front side. We have a Europe-London session opportunity on the back side. Now, if the USD XYZ pairs had the dump, coil, and pump template, maybe our XYZ USD pairs may have an opportunity for the pump, coil, and dump setup. Let's see if any of those instruments offered traders 1 or 2 parabolic trade setups during the week. Remember what I said. One instrument may offer you one great trade within the week for a parabolic scalable trade setup, and then whether or not that opportunity comes in your session. Now, Friday was an inside day, and Monday broke out. Now, here's the thing I just want to keep repeating to traders. Traders are trying to catch the moves on the smaller time frames. I'm looking for the signal day. We have a market that's closed in breakout. Why is that? Because markets only do 3 things. They break out, they fail in reverse, they break out, they stay in breakout and continue to trend, they pull back and continue to trend, or they stay in the trading range, they don't break out at all. So when a market breaks out, we can bring it up on our watch list. The bigger setup, the bigger time frame template setup is where we get volume trapped. So traders are trying to catch the move on the 1-hour chart. Now, we could have a daily chart here. It's the same thing. But traders are looking at the 1-hour candles trying to catch the move. I got that move. I caught it. But we don't even, all we have now is a signal day. We've got a market that broke out from our closing range of the week. Everything starts from Friday's closing price. Let's project that across just for fun and games. Friday's closing price. The market pumps up day 1, pumps up day 2, opening range initial balance. Hasn't closed outside of the opening range until Wednesday. It breaks out again. Opening range initial balance, Wednesday day 3, blowing off in the direction of our breakout. We now have a market that ACB masterclass traders will bring up on their watch list, looking for the ACB setup. A market that has closed in breakout at the highest closing price of the week, and in this case, the month. It's a new month, October 1st, Wednesday, and we have a market that has pumped up. And you'll notice that this 1-hour candle that we're drawing our blue line from is a breakout candle on our higher time frame. The market broke out, went into consolidation 1, 2, 3. If you can count to 3 and tell time, you can make a lot of money, and broke down. Markets only do 3 things on any time frame. It breaks out, it pulls back, and gives traders the parabolic range reversal on day 2 on the back side of the week. Where to? To where the breakout began. Friday's closing price is where everything starts from. 3 days of breakout traders in the markets. Pump and dump, the trap and shift setup on day 2. Day 1, day 2, day 3, reset, signal day, midpoint range of the week. Thursday, day 2 on the backside, a range reversal in a pump and dump template. I'll repeat, there are only 2 setups. Only 2. Any setup that you want to show me will always be one of 2 setups. You're either buying low or you're selling high. See, everything's meant to be simple, repeatable, and scalable. Any instrument. Basic model for trade entry criteria is just to give traders a visual confirmation of the trade entry, especially on a pump, coil, and dump setup, keeping everything simple. Now, the hard part for traders is this right here, the word Thursday. Most traders get into trouble on Monday. They can't wait till Thursday. They can't wait for it to set up. They want to catch the move. Except the ACB setup isn't coming back. They can scale this up in size. It's going to go from level to level. Now, I want to just keep hammering this home to traders. You make money on the setups in the days where it's really easy to make money. And the other 50-50 trades, even though you can get the diddle, you can catch the sweep, you can get the inversion, the gap, the run, the hunt, the soup, all these other things. But markets only do 3 things. So for me, I just remove all the jibber jabber and the gibberish.
and focus on rinse and repeat. Markets only do three things. They break out, they succeed, and continue to trend. Are they trapping volume for a reversal setup over 3 days or longer? Or is it a market with no setup and it's just continuing to stay in breakout or stay in a trading range? Does it offer me a reversal setup if it makes a breakout that's going to fail? Or is there a buy low or sell high opportunity in the session that I'm trading over the Monday, Wednesday, Friday template, whether it's the pound, the Swiss franc, the yen, the dollar index, the NASDAQ, gold, silver, oil, natural gas? The same templates show up again and again and again. Part of your homework will be to walk through other instruments and do nothing but look for templates that are going to offer you a scalable opportunity. The euro breaks out of an inside day. Friday's an inside day, again a signal day, closes and breakout. These are daily signals. So forget about the 1 hour chart for a minute and just understand we're looking at a template as the week evolves. 2 days of breakout traders in the market. 3 days, the midpoint range of the week. We now have a market that's broken down on the backside heading into day 2. Markets only do three things any time frame. Day 2 reversal back to where Friday's closing price, everything began from Friday's closing price, simple, reproducible, scalable, week in and week out. Find the instruments that offer you the cleanest, best trade setup in the session that you're trading. All markets do the same three things, whether they're cryptocurrencies, the same monthly template, daily chart, pump, 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 and dump. Closing range goes parabolic and explodes. A short squeeze setup into the closing range of the month. It doesn't matter if it's an index, they all do the same three things. Market breaks out of Friday's closing range, an inside day, a signal day. Friday's closing price is where everything starts from. Breakout, pullback, continuation, keeping everything simple. A Wednesday parabolic opportunity on the NASDAQ. Market breaks out again, closing in breakout, Wednesday and Thursday. Breaking out, pulling back, continuing to trend, offering traders the reversal setup on the closing range of the week. Now, some traders are going to say, well, that was out of my timing window. Well, if it's not your setup, don't worry about it. But for traders who were hunting the reversal setup, this market broke down through our low of day level, the low of the current day, pumping back up the trap and shift into our afternoon session for traders looking for the reversal into the closing range of the week, back into where the breakout began on our midpoint range. Day 1, day 2, a day 3 reversal, two types of trades on a day 3, either trending in the direction of the breakout or reversing back to where that breakout began. All markets do the same three things. There is nothing complicated. The trader, though, on the other hand, can do many things, keeping things simple, repeatable, and scalable. And if you find yourself looking at a chart trying to find a trade, ask yourself this question: is this a 90-10 opportunity, or am I trying to figure out how I can get a trade in a market? Traders do many things, but markets only do three things. And you make money, and a lot of money, on the setups in the days where it's easy to make a lot of money. Keep things simple, repeatable, and scalable. And then the next hardest part for traders will be to learn to not engage in any other random, impulsive, emotional, impatient type of behavior that can potentially put them on self-sabotage or degenerate gambling type of situations. Rinse and repeat. If there's no signal or no setup, next chart. Where is the opportunity? If the opportunity isn't there, walking away, coming back the next day until your setup presents. Catching trades is what diddlers do, and eventually they probably will blow up their account or do damage, whereas the professionals will hunt the rinse and repeat scalable opportunities, and then they'll master those setups so they can scale them up in size. Keep it simple, traders. The trader is the only variable, and all markets do the same three things. Have a great day. May the markets
go with you.